What is up? Welcome back to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, we are going to be taking a look at the stock market as well as other macro charts indicators. We'll take a look at Bitcoin really quick, as well as Magnificent Seven stocks and a couple other popular stocks as well. Now, most of you are here for crypto related content. And we need to keep an eye on the stock market just to give us an idea of how it could affect the crypto world. So let's start off with fear and greed, and we are down in neutrality. The stock market been holding up a little bit better than crypto. It almost seems like Bitcoin has maybe been front running this move. As you can see, the S&P 500 doing pretty well. But if we take a look at Bitcoin on the same chart, you can see that while Bitcoin was kind of going up with the stock market, it has sold off lately. So is that a precursor of what's to happen with the stock market as well? Maybe. I feel that historically, the stock market tends to be the more of the leading indicator than Bitcoin. So you never know. Maybe this time's a little bit different. Taking a look at some other macro charts, we have this seasonality almanac chart here showing that after we have a pump in July, which we did, albeit it went to later July, that we should expect this downturn that we recently had in crypto and are now starting to get in the stock market. So this chart just shows a bit of sideways for a few months. Give or take, every year can be different, but just something to keep in mind that these dips could be good buying opportunities more than likely, especially if Q4 is going to be good. The Fed is probably, the odds are that they're probably going to cut rates in September. We'll take a look at inflation, unemployment, some of those charts as well. But when I see a graph like this or a chart like this, what this shows me is that when the Fed is cutting by an average of 25 basis points, that tends to be fine for the market overall. But if they're cutting by an average of 50 basis points or more, then something in the economy is probably broken and we should expect to see more downside. So last time the Fed did a round of rate cuts, they started with 50, but then they didn't meet the next month. So they don't meet in October unless there's an emergency meeting. But the Fed started with 50, they didn't meet, and then they did 25 basis point cuts. So that was an average last cycle, rate cut cycle. That was an average of 25 basis point cuts. And we've seen the market do well. So keep an eye out whether or not they do the same or are cutting by a lot more. And one of the reasons for that is, we're going to be going into the second year of the presidential cycle next year, and that is historically the weakest and the choppiest. And there are other charts. I mean, you could take a look at the crypto 4-year cycle, yield curve, an inversion chart. We'll get into that in a little bit. That it all sort of lines up that 2026 is going to be probably not the best year. You never know. Things can be offset by 6 months to a year, depending on all the different things going on in the economy. But that is something I'm very wary of, and I'm still hopeful of the markets doing well throughout the rest of this year, maybe even early in 2026. And should we get any sort of a recessionary environment, I think it is important to have a mindset to capitalize on those pullbacks. So if we're all of a sudden seeing 2026, 27 get pretty bad, and we're seeing a drawback of 40% or more in the S&P, do know that is the rarest of opportunities, and that would be a great time long term to be aggressive. So when there was the tariff scare, that was about a 20-25% pullback. When there's a yen carry trade unwind, that was a pullback, I think, in around this area. So I do think this is a good chart to screenshot just in case. And here's one of my favorite macro charts. This is the Shiller PE ratio. And you can see just how overvalued we are. And yes, it is more than 1929, the great financial crisis. But, you can see overall the last 30 years are very different. So I'm not doing a one-to-one comparison of what was going on back here. So I like to zoom into the past 30 years. It includes a dot-com bubble. I heard a lot of people saying, a lot of really smart macroeconomists saying that we are probably entering an AI bubble, and the Shiller P ratio would indicate as much. So the dot-com bubble Shiller P ratio topped around 44. Right now, we are at a value of around 39, getting close to that. So do be wary. If we start getting above 40, that might be great profit-taking opportunities for some of the more risky tech assets, especially crypto. I'd be taking a look at that. One of my favorite websites that I go to, and not sponsored by anyone, obviously, I don't have anywhere near a large enough following, but one of my favorite sites to look at macro charts and indicators, subutrade.com, great site. And I just take a look at this as far as just getting a mindset of what the market could be doing in the near future. So it puts a lot of good things in perspective, such as the VIX, what that could look like moving forward. You can see here just a lot of good stuff. The S&P 500 after the VIX falls for 4 months in a row. And this is just good almanac type data and things to overall expect. It gives you a percentage of how often we are positive and that things could still be pointing in a good direction. The Russell 2K, this matches up well with crypto when it breaks former all-time highs. And as you can see, large speculators' net positions has started to come up from the bottom. I love what this chart is showing us. So if the Russell 2K starts breaking up above former all-time highs soon, I think that's going to be very risk on, especially for the crypto world. And that's probably we're going to see that Shiller P ratio getting into the mid 40s possibly and getting a crypto cycle top. So highly recommend Subu Trade. A lot of great macro charts and indicators. And I could do a whole video on this, but I do think it's worth checking out. Let's go over to crypto. Crypto has just been hanging around the neutrality territory. As you can see here, it's about the last 30 days. If we zoom out to the last year, you can see we have a series of higher lows. There was recently kind of a medium time frame lower low, and we just kept running into a ceiling here of the area between greed and extreme greed. And I think once crypto is going euphoric, once Bitcoin's going euphoric, 155 to 200K Bitcoin top, that's kind of the range I'm looking for. Then I think we're going to see that extreme greed really kick in. But September, you've probably heard people talking about how, what's the name? Selltember, people say. So, we could see this downward trend continue, maybe a spike down before going up. And if we do, I'm going to be taking a look at that. Me personally, not telling you what to do, is a buy the dip opportunity. We did have a negative August, and you can see here, macro-wise, or historically, we've had August and especially September are the two most negative months. So because August was more negative, maybe September won't be as bad. We had this chart here before. I mean, this, again, it doesn't have to happen, but this chart even shows that on average, August tends to have a little bit more negativity than September. And whether that's later September or early September, who knows? But again, it's just something to keep in mind when we're taking a look at the charts. Does it all line up? And in a lot of my crypto videos recently, I've been talking about how we are definitely in phase 2 right now. We have broken from the bearish technicals to the bullish for Ethereum and it pairing against Bitcoin. And so, once we see Bitcoin getting closer to its tops and total 3 breaking above former all-time highs, I think we'll see the large caps. They've been doing well. But being here since 2017, let me tell you, they can do a lot better. So once we see the large caps, Chainlink, Cardano, XRP, all those really doing well, Bitcoin's probably getting close to that top for this cycle. And then the month following a Bitcoin top is when we see that massive rotation of alt season. And I've shown in the crypto videos before that from the moment Bitcoin tops for its cycle and we get that alt season, Ethereum darn near does a 2x the last two cycles. Not saying that has to happen again. It could even do a 1.5x. It could still underperform and still do great and go somewhere 7 to 10K. So just keep that in mind. This chart, just shows that, expect pullbacks for Bitcoin. As far as the altcoin year, we're still relatively low. Altcoins, in my opinion, are still at a discount, but they could still become more of a discount. And on the rainbow chart, we talk about this every week in the crypto macro charts and indicator video, kind of getting back into that light green area, range of about 80 to 106. And so, like I said, on this channel, I talk about other crypto assets, mining stocks, all that. All right, let's see here. Let's go to the S&P 500. You can see it bounced off the 20-day moving average. Probably even the 21-day moving average would be another indicator to have, but it does look like we're sort of, after we had this move, sort of stalling out here a little bit. And a couple indicators that are great to marry together would be the stochastic RSI and the MACD. We'll take a look at this, and I'll show you something on the weekly and the monthly. So the weekly, overbought, it's starting to turn down. MACD, it's starting to turn down to, whether or not we get a big pullback or not, that remains to be seen. The MACD can turn down a little bit, or it can turn down a lot, but when it turns red, it's not good. And you can see the weekly's gearing up for that. On the monthly, however, I do think this is important to keep in mind. The monthly is still going upwards, MACD and stochastic. So there's still room for positive momentum, but the weekly showing me, at least, that maybe we might get a little bit of a pullback here before pumping up further. So that is what I'm taking a look at as far as the S&P 500. Let's go to the volatility index, the VIX. You can see here this last week, we did get a spike up in volatility to those moving averages, but right there, it's showing me that maybe this is just going to be rejected. We're just going to kind of grind higher, maybe consolidate, chop for a little bit. So that's not bad. One of my favorite leading indicators is a percent of stocks above their 200-day average. This is MMTH, the ticker. And we did get a bounce off those moving averages, broke up, maybe coming back down, might get back down on those moving averages before going up. So we are seeing this stall out, but usually when we've reached local tops, we're getting to an area. I like to take a look at the 67%, 67 to low 70s area when it's extremely toppy. We're looking at the 90s. So if we start getting above 70, do be wary. And overall, as far as local bottoms, we have the moving averages here. We also have around 45%. When we take a look at the United States Central Bank balance sheet, USC BBS, we can see that the last time the Fed switched from quantitative tightening to quantitative easing, it was a bounce right off the 100-month moving average. And would you believe it? We are right there. We have tagged the 100-month moving average. And to me, this makes sense. The Fed is all of a sudden probably more than likely going to cut rates next month. Whether or not that's a good thing, that I'll leave that for you to decide. I have a little bit of hesitancy on that too. I am worried about inflation or stagflation with the way the dollar and gold and all this is going, especially if they're going to be cutting rates when unemployment's still low and inflation is curling up. But besides that, if they're going to be cutting rates going to QE, this was the area last time that the Fed switched to quantitative easing. One of our charts that we also take a look at as far as, whether or not to be wary or bullish or bearish is the yield curve inversion. This is the US 10-year minus 2-year. Once the yield starts spiking, do be careful because that means it's probably not going to be a great time to invest in stocks as much as people getting into treasuries, bonds, things of that nature. And I have these red vertical lines to show you where market bottoms have been in the past, and we can just add on the S&P 500 and show that once yields are spiking and we're uninverting, those are times we hit those market bottoms. here was before COVID. We had a spike there. And then you can see here that the market went down with the yield curve inversion. And you might ask why. And this lines up also with inflation. So I wonder if this goes back to the 70s. It doesn't. But do keep in mind that if inflation is spiking, that is another indicator. This chart is pretty good about calling recessions in the upcoming future as yields are spiking, but also you want to take a look at inflation as well. Inflation can lead to problems too. This is the unemployment rate. It's showing that last time it went up to 0.1% to 4.2. If we add on the moving averages, that's right at the 50-week moving average. I also wanted to take a look at inflation, and we can see here that inflation, the Fed really wants at 2%, and we didn't quite get there. You know, it's this magical number they kept calling for, but Trump has talked about replacing Jerome Powell. Forget the guy they were talking about possibly putting in there. But we can see the 70s here, how we had these spikes in inflation. And I've seen some charts comparing these spikes with inflation to recently, in that if we do see our government continue to spend the way they're spending, as much as they talked about Doge and cutting all this unnecessary spending, and I think, you know, to an extent that's a great idea, they're still spending more than ever. You can see this on the actual government website, that they're still spending record amounts. And one of the best theories I've heard as to why that is that they are spending so much because two reasons. One, you want to keep economic growth going, because if you have inflation as well as low economic growth, it's not a good thing. But if you have just inflation, you have economic growth and inflation going up, and it makes the massive amount of debt that the government has cheaper. So if you devalue the dollar even more, the debt that you do have, which is a lot, kind of becomes cheaper, even though, you know, that's kind of a weird way of going about it. So in a stagflation environment, you would have bad economic growth and inflation as well. So people, you might hear them talking about stagflation or inflation. Again, inflation means there's still economic growth, unemployment's still good, but inflation is going up. Stagflation is bad economic growth, unemployment going up, and inflation going up. Deflation, bad economic growth, and inflation going down, of course. So I've heard a lot of people say deflation is worse than inflation or stagflation. So I'm not that smart to tell you which is the best. Of course, I'll say take economic growth any way you can, and that's sort of, I think that theory makes sense as far as why they'd be printing. And if they continue to do that, then and we see these stock cycles and the crypto cycle come to an end, then real estate commodities would be the next rotation play after speculative tech, after we start to see the stock market correct a little bit. All right, let's take a look at Bitcoin. Right here, we're on the weekly. We had a buy signal a couple weeks ago and talked about how with Bitcoin, when we get these buy signals, you know, crypto I find to be very trendy. And when we switch Heikinashi, I love Heikinashi for crypto, a lot of crypto assets. And when we switch to weekly red or green, that's a good time to, you know, look at dollar cost averaging in, taking profits. And then going over to the monthly, let's take a look at this. Everything's still green there, so monthly's fine. Let's take a look at the daily. Let's take off the buy sell signals here because we have a fib low to high as well as our moving averages. And what we see here from this pullback, we had a 618 pullback, and that's a good area for a bounce support. Sort of the opposite. If you're ever seeing an asset, you know, that tanked and it starts to go up, you can see if we did high to low, 618 is where you can get rejected to. But what do we see here? We have the 100-day moving average, the 20-day moving average, and a doji right at that 0.5 fib. So it's undecided. We have three major areas of resistance. This tells me to be wary of, if it starts to move down, I'd be watching that 107 level like a hawk and taking a look at, 104 to, this is at 102 area, the 1618 macro fib from high to low here. I do think that can hold up more than likely. Another thing to be wary of, and I've been talking about this a lot, the MACD. MACD just turned weekly, turned red on the weekly, and that has never been a good thing. So once the MACD looks like it's curling up, to me that's showing some levels of confirmation. If the charts are showing that too, I'm going to feel better about that. But at this level, I'm going to be patient. And if we get rejected from here, watch 107 and watch lower. All right, let's get into Mag 7 stocks. Let's start off with NVIDIA. And as we can see, NVIDIA hit this level right at around 183, came down to its 50-day moving average. Since NVIDIA started this whole move, it has stayed above that 20-day moving average. I do think this would be a good area for support before potentially working its way back up. But if it does start to come back down, obviously take the moving averages from there. I don't think anything like April, but you never know. I did see, what was it, the Japan rate. How could I find it out? Japan interest rate. I did see recently that Japan raised rates. I'm not sure if that's true or not. Yeah, to me that just looks, or that they're talking about raising rates. And when they have in the past, that has coincided. You probably remember from last year in August, that coincided with the yen carry trade unwind. Let me get some water. They coincided with the yen carry trade unwinding. So you can convert to from yen to get things cheaper, and we saw an unwind in the market every time Japan does raise rates. The market tends to not like it for a month or so, so do be on the lookout for that. That has had a negative impact. So just something I've been reading out there, but we don't have confirmations on the chart yet. Let's take a look at NVIDIA underneath our other favorite indicators. Stochastic weekly, to me this still has to show us confirmation. Right now it isn't. It's just continuing down. We'll take a look at the MACD. We might leave these on. The MACD is even possibly flirting with some red areas. So we'll just do MACD and we'll do moving averages to see areas to watch for. So if we do see this flip down, the 50-week moving average is always a good area to remain bullish and to get some good support. So at worst 140. If we hit that 20, that's at around 158, 160 by the time we get there. Microsoft, even more concerning, similar to what I just said, areas to look at on the weekly, 485 as well as 451. Again, remember, these are moving averages. So if they tag those areas, you can see we had a micro fib to the 1618 from that high to low, hit it perfectly, and we've been selling off. So people sold that wick and they got the hell out. So that MACD has me nervous. All this talk about, September being bad, maybe the markets are just sort of pricing in whatever the heck is going to happen with rate cuts. And, if we are going to see Japan raise their rates again, that's, to me, even giving me more of a bearish case scenario on the micro time frame, micro to medium term. Just a dip buying opportunity is how I would be looking at it, barring anything major. Apple came back up to its 786 fib. So remember what I was talking about before, high to low. We have this fib drawn micro fib, and it came up to its 786. Again, 618, 786, those are two good areas to possibly hit some level of resistance. And the MACD is being stretched to the positive side. It could still go higher, but I do think that 240, 241 area might be an area where people are selling, and it could get back down to that 0.5 fib, 214, 215 is what I'd look at for Apple if I'm buying back in. Amazon coming back down again, just kept running back into resistance at that 888. And we have the golden pocket, the 50-week moving average coming up to it, 211 to 214 for Amazon. Google, I saw this thing recently how a court said Google, and I never doubted it, that they can still use Chrome or something mean, why the heck not? I thought it was much to do about nothing, but when Google was down here at 141, we were talking about this, how Google, Apple, anytime they're under their 100-week moving average, at or under it, it tends to be a great area to buy long term. And Google was there. It had the lowest PE ratio, price to earnings ratio, of any of the Mag 7 stocks. And all of a sudden there's some, court news, are they going to take away Chrome and all this stuff? And then, of course, Google blasted off. So, since that time, I mean, if you were to buy it anywhere down here, over the course of 5 months, you've had a 60% gain on a Mag 7 stock, which is just amazing. So congrats to all you Google buyers. As far as Meta, let's zoom in here, or zoom out, sorry, to the weekly. We can see the MACD, again, that's a concern. And it last came down to the 100-week moving average. You can see here, it loves the 20. So watch that 20. If it gets anywhere near the 50, I'd be careful of that. I am taking a look at some profit taking from Meta at around that 867 level. I do think that'd be a huge area for it. Let's go to Tesla, and then we'll go to Coin, MicroStrategy, and Palantir. Tesla from that high at around 490. Let's fix this up a little bit here. From that high to low, we have this microfib. Got rejected off that 618. So remember what I was talking about for Bitcoin, how I had that microfib low to high. This is high to low, and it ran into resistance off that 618. It's tested it 1, 2, 3 times. And so if we do go back down, that 50-week moving average, and we have this macro, what is that, the 786 fib? The 50-week moving average, macro 786, that's been getting bought up for Tesla right at 305. So I do think that's a good area for Tesla. All right, let's go to MicroStrategy, Coin, and Palantir. MicroStrategy right at its 50-week moving average. And it is, since this move up, after it crossed the moving averages, it has never gotten below the 50-week. So if you love MicroStrategy, here's a bullish case for you. From high to low, we saw it move back up, challenged the 786, came down, and it's at the 382. And, no surprise to me. Let's actually take this off for a second. The 382 and the 50-week moving average are two ways of looking at whether an asset is bullish or bearish. Bearish when you're taking a look at fibs and moving averages. If you're above the 50, above the 382, you are still bullish. When you get below the 382, you can put in new lower lows. So this would be an area, I mean, you can wait for confirmation. You can wait for a buy signal. This is the indicator I use for Heikinashi. So by Shobajek. So shout out to them. Want to give credit where it's due. You can wait for confirmation, buy signals. Daily, is it showing us anything? Broke underneath the 200-day, and that I would watch to see what happens. If all of a sudden the daily we start to lose this, I'd be careful. But if it starts to hold up here and we're seeing the market turn around, great. But again, we just saw a lot of charts and possible indications of September being bearish, at least for the next maybe couple weeks, 2-3 weeks, something like that. So I'm willing to be patient here. Me personally, I have a budget that I dollar cost average in from every month. And right now, there are some plays I might get into, but I'm going to be patient with my budget right now because I don't want to chase. And I am curious if there's going to be better value discount opportunities. So that's just my 2 cents. But if you love MicroStrategy, this wouldn't be the worst area should it go higher. Do keep in mind, though, before I move on to Coin, MicroStrategy topped here in February of 21, and this is just last cycle. Not saying it has to happen again, but you can see it topped well before the ultimate Bitcoin top, but even that first peak as well. MicroStrategy did top before it. This was in April, and here was February. So that was 2 months before. Not saying that we have to have a Bitcoin top 2 months after. Again, I don't look at technicals by timing as an indicator, but I would be cautious of that, especially with a wick like that. We're going to find out real soon, though, with MicroStrategy. Let's take a look at Coinbase. Coinbase, I think it's also important to take a look at this with Bitcoin. Should have kept that on. We can see how this moves with Bitcoin and why wouldn't it. So once this came out literally at the top, you can see April of 21, literally at that first top. Yes, Bitcoin topped later. It even went up a little higher. And you can see from the IPO, it just returned to where it was. So whenever Bitcoin's topping, if it gets a 150, 200K, something like that, I'd be taking a look at coin, getting up to its 1618 to 2618 area, somewhere around 673 or even 1069. As crazy as that sounds, those would be like my two definite profit taking areas for coin. So yeah, I wanted to keep that fib. Let me do that one more time. You guys can see how I do it. High to low, boom, here we go. But right now we're still between the high and low, so this is how we take a look at targets between. But once we break up, then we will take our fib off log. Let's finish up with Palantir. I mean, this stock, you can see from 21, the pump it up times. This thing, got up as high as 44, came back down to these levels around $6 to $8. I was happy enough and lucky enough to get some in this range between 30 and $6. So very happy with my Palantir. But this thing, man, it is just rocketed up, and you can see it's come back down to its 20-week moving average. Last time that's where we found support. So there's that, and obviously AI is the big thing right now. But from this low, just something to keep in mind. Over the course of 1,000 days, about 3 years, it's moved up 1,000% each year per year, so 3,000%. So how much higher could it go? I don't know. But if we take a look at more financials and the price to earnings ratio, come on, it's not wanting to work for me. You can look this up. I probably have to hit refresh. I'm not going to do that to you guys right now. You can look this up yourself, but Palantir got to a P ratio of 600. And for reference, Google was hanging around 25, 30, which is just crazy. So you can take a look at that. I did see it come down to the mid 500s, but yeah, Palantir has had a few red weeks, to say the least. It is finding support on that 50-day moving average. So it's getting squeezed between there and the 20. So watch to see if that holds. If it starts coming down further, you can see the 100 held up nicely, almost got to the 200. So, if you think there's still a lot of room to run, an area in here would be what I'd be watching. I do think the moving averages tend to sort of rhyme and where to find value as long as it stays in the current trend. That's all I got for stocks today. Hope you guys enjoyed the video. Hope you all are doing well. Just a quick note, I'm sure for any of you regular viewers, you probably noticed my I rewatch my videos time to time, just see how it looks and sounds. And I sounded a little quiet in the videos this week, and I apologize for that. Slight change in my work schedule. I had to get up earlier. And I like to be awake for half an hour, get an exercise, meditation, and something to sound alive for you guys, and I did not. So that's my bad. I apologize. I'll do better in the future for the 100 of you that come and watch my videos. So I do appreciate you guys. I always welcome feedback in the comments too. So if I sound like crap, if I sound tired, it's okay for you to say that, and I'll make the correction as much as I can for future videos. So just wanted to put that out. I heard it wasn't my best, and I don't want to not give you guys my best, even though I'm not a big time person on YouTube. I don't care about that. I don't care about making money. I do this for myself. I do it for fun. I do it for you guys, the community, so we can have conversations together about stocks and crypto. So appreciate all you guys. Appreciate the nice comments you leave in the videos. And yeah, if you thought the videos this week were a little different, that's why. It have to get up an hour earlier, and it's an adjustment. So anyways, appreciate you all, and hope all of you have a fantastic Thursday. Have a wonderful day. Take care.